Aloha class, I wanted to do a video on exercise 2-9, journal entries and T accounts. The Polaris company uses a job order costing system. The following data relate to October, the first month of the company's fiscal year. So they give you all of these entries to do, and then it says prepare the journal entries, prepare the T accounts for manufacturing overhead and work in process, post the relevant information to each of these accounts, compute the ending balance in each account, assuming the work in process has a beginning balance of $42,000. So we're already working on products over here, and so they say there's already $42,000 in work in process. So I've put that into work in process. I have my T accounts. They really only want you to do manufacturing overhead and work in process, but we can do all the T accounts just for practice, just visually as well. A raw materials purchased on account, so it's not cash, it's going to be on account. So for 210,000, oops, sorry. So 210,000 will debit our raw materials. We purchased those on account. So journal entry A would be raw materials. I could just reference that. And then I'll do an accounts payable because it said it was on account. Okay, so if this is my debit, this is my account, and my account, and then my debit and my credit over here for my journal entry, and it was for 210,000. Okay, so that's journal entry number 1. Let's go on, or A. Let's go on to B. B says raw materials issued to production is 190,000. 178,000 is direct materials and 112,000 is indirect materials. Let me see if I can just copy and paste this over here for. No, it won't let me paste that. Nope. Okay, so direct materials are 178,000. Remember, these direct materials will go right into work in process, and 12,000 of indirect materials, we call that manufacturing overhead, right? So 178 and 12,000. Work in process, manufacturing overhead, 178,000 and 12,000. And then this is from raw materials, right? We requisition the raw materials and put them into use. 190,000. Okay. Direct labor costs incurred 90,000. Indirect costs incurred 110,000. Okay, so now they just told you the totals: 90,000 direct, 110 indirect. We don't use direct and indirect labor. We just use work in process for direct labor, and indirect labor we use manufacturing overhead, right? And then this is labor, so we probably need to pay our wage workers. Wages payable. Let's make sure that that was a payable and not a cash. It said also it was incurred, so we incur the expense and we account for it, but that doesn't necessarily mean we've paid it, so that would be a payable there. 90,000 and 110,000. 90,000 and 110,000. Okay, and then let's move on to D. Depreciation recorded on factory equipment. Remember, depreciation for factory equipment goes into overhead, right? And this is a depreciation entry, so we would just do manufacturing overhead. Instead of doing an expense or a payable, this would be accumulated depreciation. Right? Because depreciation is a non-cash expense, and it was for 40,000. And then we have other manufacturing overhead costs incurred during October, 70,000 credit accounts payable. So they actually told you what the credit was there. That was nice of them. So we can do our entry properly. So we'll use this manufacturing overhead, and we'll use this accounts payable, and they said it was 70,000. So instead of typing again, I can just reference another cell, and that's okay too. Okay, number F, the company applies manufacturing overhead costs to the production on a basis of 8 per machine hour. So they've given you your predetermined overhead rate right there. Total hours, a total of 30,000 machine hours were recorded in October. So this is your actual hours. So they recorded these actual hours. That's actual hours. And remember, if we're going to apply overhead, that'd be $8 predetermined overhead rate times by actual hours, 30,000. And then this will tell you what happened after we've completed all the materials, all of the goods, the products. So $8, let's see, $8 times it by 30,000 hours. Did I get that right? 300,000, 30,000 hours. Right, so this will be our applied overhead, right? So this is the work in process. This is our applied overhead. And that's just a note. You don't have to put applied overhead. So we'll credit our manufacturing overhead. So let's look at our T account for overhead now. Let's look at that T account for overhead and see what we have in there. If I can zoom out a little bit, I know it'll get small. And I'll continue this on the next video.